Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike, and Happy New Year.
Happy New Year's to you, too, and hopefully for everybody, this new year will be much better than the last year was, because it was the craziest one I think many of us have lived through.
You've just published an article on WallStreetWindow.com called The 3 Factors That Will Define the S&P 500 in the New Year. Well, let's take a look at those 3 factors, Mike.
Yeah, sure. Well, there's 3 things that are happening right now with the U.S. stock market that are very interesting, and they'll sound a little contradictory a little bit on the face of them, but when you combine them together, I think they're likely to define how the market plays out next year. The first one is the fact that coming into the end of the year, there's been build up in the stock market, record margin debt levels. It's around $800 billion that people are borrowing from their stockbrokers using their accounts as collateral to buy more stocks. They're borrowing money to buy more stocks, basically, and they're doing so with more money that's ever been done before. Now, that's historically a very risky thing because they're using margin debt, and when the stock market does pull back, and it will eventually, not that I think it's going to happen next month, but it will eventually, when it does, people on margin end up being forced to sell. Usually when the market falls 10%, they'll start to panic and liquidate. And then if it falls 20%, their brokers force them to sell. So if you get a 20% decline, that's why often there is huge panic in the market. And, for a day or two, it's a forced liquidation event. Now, what happened last March is beyond even that. But that's one thing happening. So more risks being built up. Along with that type of risky behavior of margin, there's also record call buying. And frankly, a lot of people, we've talked about this throughout the year together. There's a lot of new people in the stock market trading for the first time that got in since the March drop with new accounts. Robinhood, for instance, has opened up 10 million new accounts throughout the year. It's just all these massive numbers of people, mostly younger millennials, and they've never seen a real market decline. They've only seen the 10% pullback that happened after Labor Day. So I think there's a lot of inexperienced people in the market, which creates a risk factor. So that said, there's the second thing that's happening right now as we're speaking is, despite what I've just said, the actual stock market volatility measured by what the prices are actually doing is fairly low. For example, when I speak of volatility, what it means is how much the stock market is moving up and down in any given day. March and then the rally afterwards brought record volatility in the market. It never fell that fast off of a high as it did this past March since the 87 stock market crash. The S&P fell 33% in less than a month and then rallied over 70%. So never before had it declined that fast and rallied that fast off of a low. That's record volatility. But now, as we go into the end of the year, the volatility has completely collapsed, and by an indicator such as the 20-day Bollinger Band width indicator, which measures these things, people it'd take a long time to go in depth on it, but it's just a measurement. It's at a low for the entire year, right as we speak. So volatility has shrunk. So the market isn't behaving in an erratic manner. It's doing quite the opposite. Despite that, the third thing, which will sound contradictory at first, is the most popular indicator for measuring volatility that's talked about quite often is the VIX. It measures the premium that people pay for volatility in the options market, and it's above 20 as we speak, and it got to like 85 during the March drop. But historically, it'll trade below 20. It's in the past couple of years, it's even below 15 for most of the year. And so 20 is actually an elevated level for this indicator, but it's not, so the Bollinger Band and the real price volatility is at a record low. The VIX is elevated. That sounds contradictory, but what's going on is the VIX measures sentiment. So people in the options market are hedging themselves. They're paying higher premiums than they really should. The volatility of the VIX is higher than what the real stock market volatility is. And I think when you put all this together, what it means is that I expect the VIX is going to go lower. It may take 6 months to do it, to get below 15 or even down to 10. And during all that time, the real volatility in the market, I think, will be like it is now and very low. And we could see months where people just build up more and more margin debt. So if I can really simplify it, I guess, what I'm basically saying is I think the way the market has been trading really since the vaccine news was announced and the election is likely to continue for 6 months, and people are just going to get incredibly complacent, and that could set up a decline or some sort of short-term correction in the summer or second half of next year.
Tesla joining the S&P 500 on December 21st. Is that now a big factor in the S&P index?
Well, it's not as it's obviously a big event, but the S&P has been still dominated by the Facebook, Amazon, Microsoft, Google, heavily weighted by market cap by those couple of stocks. Now Tesla isn't in the top 5 by market cap, but it's in the top 10, which is pretty significant. But those 5 stocks tend to really trade together. Tesla kind of trades on its own. So I don't think it's going to have a massive effect on what the market does next year as a whole. But I do think it's a big indication or sign of what the stock market has become in the terms of the risks people are willing to take, or the valuations and prices people are willing to pay for individual stocks, because Tesla doesn't turn a profit, and it's got a market cap bigger than General Motors and all the other car companies put together. So it's kind of a crazy stock. Of course, one could have said that a year ago, and it's gone up. So that's what Tesla bulls will say. They'll say, well, the valuations haven't mattered for the past year, and this is Tesla, this is Musk, and, they think he's a special, unique situation. But I heard, and you heard stories like that in 1999 about various internet stocks, that were highly valued and supposed to revolutionize the world, and then one day, they went back down. So I think that's ultimately what will happen one day with Tesla. And I think, there's 2 ways to approach the stock market, investing in general, and that is to buy things that you think have a fundamental value to them for the price you're paying. Maybe you're getting a good dividend, or maybe the assets the company holds are priced cheaper than the PE of the stock or the book value of the stock. Or if you're doing a mining stock that doesn't even have earnings, like say it's a small cap miner, you think, well, these guys are drilling a property and they're going to be able to prove up 5 million ounces of gold, and that's going to justify it being worth much more than what I'm paying. But with Tesla, and some other stocks in the market, I find it very difficult to come up with arguments based on valuation. So therefore, the only thing left, and I think this is the real reason people buy it, is because the price is going up. And the higher it goes, the more exciting it gets. And it kind of links up to why people put on more and more margin debt. It's not because the stock market is more cheaply valued, but because their accounts have gone up and they feel more and more willing to take bigger and bigger risks. So I think that's what the thing about Tesla is. It should never have gone up as much as it has and be put in the S&P 500, in my opinion, but it is because the stock market has become such a incredible mania. Perhaps we're in the situation that we were in 1998 in the stock market or 1999 at the beginning of the year, but it's incredibly breathtaking, especially when you look at the real economy and the economy between what you see in real life and what the stock market's doing. It's amazing.
Does this remind you of the 1999-2000 .com bubble and bust?
There's a lot of similarities. It does, particularly now. I didn't really think that coming into this year, but the two big similarities is the rise of the Robinhood trader. I started out in the 90s. I was one of these day traders, basically. I don't day trade now, but that's how I got into the market. And at the time, supposedly there were about 60,000 day traders, trading every single day and adding a lot of liquidity to the stock market in 1999. And there's people like me at the time that were younger, in my early 20s, and buying internet stocks and so forth. And now this year has brought the rise of the Robinhood type of person. I mean, I never thought we would see a time like the 90s where there would be an actual flood of new people into the market, younger people, and it's happened again. And it takes a mania to attract that kind of numbers of masses of people. So that's a big similarity, and there's good and bad to it. The good is it's good that there's new people coming in the market, and even if they lose money at some point, a lot of them will learn from that and learn to invest better and trade better. That's part of how it works. Even if it may take some crazy advances and declines in stocks for that to happen. But the other similarity is some of the individual stocks that we've seen this year in their valuations. Another one is DoorDash, which had an IPO recently, and the company has a market capitalization of $50 billion, the same as General Motors, and only makes $25 million in profit. So that's one of the most insane types of valuations I can even think of. And there it is in the stock market, something I never would have thought. I can only go back to 1999 to find something similar.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Mike Swanson. Mike, you talked about mania sweeping the market. What about Bitcoin? Where does that fit in?
Well, to me, it's sort of like a penny internet stock or something in the late 90s, or one that really had nothing going for it, no revenue at all. For example, one of the craziest stocks I remember back then was some internet stock that's just simply set up a website to sell National Lampoon merchandise, and it had a market cap of over $100 million. Back then, and then you could look at the prospectuses for some of these things. I remember there was another one. I don't remember what the company exactly did, but its headquarters was a closet in a janitorial company. And that may sound crazy. How can you compare things like that to Bitcoin? The people that really believe in the Bitcoin story, they think it's going to replace currency. It's some brand new thing that's going to revolutionize the entire world. But to me, I heard that talk about the internet, and the internet did obviously make a lot of changes. I wouldn't be running my website and doing what I do without the internet, but what people were saying about it back then, and, was much crazier than what it became. And I think that's ultimately the Bitcoin story. Okay, we can transfer payments with this. When we do it, we get slapped with a massive, charge. So it's not really cost effective. And that's the only thing it's good for, as a utility. And but people focus on the movement of the price, which has nothing to do with, what you might actually use it for. And they see it go up or down and try to trade that. But that's what I was doing in internet stocks in the 90s. I was buying and selling internet stocks, but I never believed that, I believe most of them would go bankrupt, and they did. I didn't really believe, that these things were real, but the Bitcoin people do believe these various cryptocurrencies are something, absolutely amazing. That to me, they're just, the worst of penny stocks. You can buy a penny stock that is a good company that has earnings and revenue and has a real future to it, but most penny stocks don't. And these cryptocurrencies, it's just virtual paper. You don't have any. It's never going to pay a dividend. It's not like a stock where the company can get bought out, or you are like owning something that you're owning a share of a business. When you own a cryptocurrency, you're owning virtual currency. How's that any better than owning a U.S. dollar in your pocket? Because the dollar goes up and down in value every single day too. And I don't want to, I don't think of the U.S. dollar as the greatest investment in the world. So why should I think of cryptocurrencies as? That's my basic view of it.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, what do you think is going to go on with gold in the new year?
Well, gold is a interesting thing, because when we look back at what happened in 2020, gold pulled back when the stock market fell 33% in March. Gold fell about 10%, and then when the bottom came in, gold made a new high before the S&P 500 did. So one of the things gold has done is show us by its performance this year that it's now less volatile than the stock market, less volatile than the bond market, and therefore, when it goes up, it's kind of a safer investment than both of those things are at this point. So I think that's the real big story when it comes to gold, and ultimately why there's been, over the course of the year, a lot of money that's flown into gold all over the world as an investment, because as interest rates went to zero, the bond market, corporate bonds, treasury bonds, bonds over the world, no longer provide any return that makes any sense for what you're doing. I mean, if you buy a 10-year treasury bond, you're locking your money up for 10 years, and you don't even make 0.9%. And you're trying to make nothing while taking the risk that, if you get 2 or 3% inflation, which the Federal Reserve says it wants, then you're going to lose more value on the money than you get on interest. And that's a massive problem for anyone that wants to invest in the financial markets, because historically you use bonds as the safe so-called portion of your portfolio, and now it no longer can provide that function. So I think gold and silver have taken the place for many people, and I speak for myself and I think for many of your listeners, as an alternative now to the bond market for the safety portion of a portfolio, a portion of your portfolio that is less volatile than the S&P 500 and has better upside than bonds, and perhaps even the S&P 500 too. Because you go back from, let's say, March of 2000 to 2008 or 2010, that was a decade. If you analyze that decade, gold beat the performance of the Dow and the S&P 500. And if you go from that, if you start that March 2000 to today, over 20 years, it also beat the performance of the Dow too. So gold's a good thing to own. And this year, silver actually went up more than the S&P 500 did also. So if you want to beat the market, these are also ways to do it. And of course, the mining stocks, the best ones go up even more than the metals do, and we've seen that happen too this year. So I think that's going to continue going forward now for the next several years at least.
What's the outlook for the U.S. dollar?
Well, yesterday the U.S. dollar made a new low for the year, and I think it's going to continue to decline. It's not a problem yet. It's going to help gold and silver, because gold and silver typically go up when the U.S. dollar goes down. But today, this morning, the Wall Street Journal had an article that basically said the dollar is going to decline. The Federal Reserve policies are actually going to contribute to the decline, because they have interest rates at zero, they have quantitative easing, and the U.S. government is passing all these stimulus bills. In fact, if you take the two stimulus, this is absolutely incredible. People don't realize how big the stimulus is. If you take the stimulus bill passed in the spring, and this one just passed over Christmas, it's bigger in terms of GNP for the entire economy than the Marshall Plan passed after World War II was, and even bigger than the New Deal passed in 1934 by the Roosevelt administration. So this is actually the biggest government stimulus, bailout, whatever you want to call it, program in the history of the United States. Well, that's adding to the deficit, obviously, so the U.S. dollar is going to slowly go down. However, the article in the Wall Street Journal also concluded, and the whole point of the article was to reassure its readers that this does not matter. It's not going to hurt you as an American. It said there's all these benefits. It'll make it easier for the United States to export things. And so hopefully that can stimulate manufacturing. And it said any problems that there are, investors are smart enough to be able to manage ahead of time. Well, that's a very optimistic thinking, I believe, an attempt to just completely reassure the Wall Street Journal readers, which are, millions of Americans, But the sad fact is, unfortunately, very few Americans are doing anything to prepare for any negative impact of a falling dollar. And I don't think there really will be any apparent negative impacts, at least in the first half of next year. So everyone's going to just be complacent about it when they should be buying gold and silver to not only hedge themselves but to benefit from it. So it's going to be quite an interesting time. If anything, I believe the decline or bear market in the U.S. dollar will be one of, if not the defining feature of the financial markets for the next 5 years.
Mike, have a prosperous and happy New Year.
You too. Great talking with you, and let's move on to 2021.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.